Hey everybody, welcome to the podcast for TraVek. This is Before the Hammer Strikes. Today we've got a great guest with us. We've got Zeno Zennaro. Welcome to the show, Zeno.
Thank you so much for letting me be here.
Yeah, absolutely. Appreciate you being here. Zeno's a mortgage broker here in the local area, and he's been doing it for a long time. So I'm excited to have him on the show and excited just to pick your brain on things. I've got a history in the mortgage world. I think you and I talked about that a little bit previously. At one point, I worked for Countrywide Home Loans in a very prior life. Very different. But I'm excited to talk to you and see what's new. Tell us a little bit about yourself. Like, how long have you been in the Valley? What got you into what you're doing?
Yeah, for sure. So I've been in the Valley since 2008. Kind of came here on a whim after college. 2008, there wasn't much going on in the economy, so I said, let's try something new, and decided to venture on out to Arizona, and been doing mortgages ever since. And like you, I actually started with Countrywide, believe it or not. And talk about a volatile career path.
So wait, let me pause you there. You started with Countrywide in 2008.
Yes.
Okay, so if anybody knows anything about what was going on in the world in 2008, specifically with Countrywide Home Loans and the mortgage industry, that's a crazy time to get your start.
Yeah, it was absolutely crazy. During the first week of training, Countrywide's stock price went down below $1. Everybody was freaking out. The regional manager came in and said, "Don't worry about it. We've got all the assets we need. We're liquid. We're not going to get bought out." I think that was on a Wednesday, and then by Friday they said, "Welcome to Bank of America."
Right.
So right during that transition, a ton of crazy stuff happening, and it just was an indicator of how this career might go. I was hoping it would be a little bit more solid, but honestly, that was just a part of the economy at that time. A lot of uncertainty and just crazy things happening.
No time to learn to swim except for getting thrown in the deep end of the pool, right?
That's right.
Good for you.
Yeah.
So fast forward, you started in 2008. You moved here in 2008. Where did you move from?
So I moved from Vermont, technically. I went to school in Burlington, Vermont at the University of Vermont for 4 years. I grew up actually, for the most part, outside of Baltimore in Maryland. And didn't really know anything about Arizona and had the opportunity to come out. And I just said, try something different. I froze my butt off for 4 years in Vermont. I needed to thaw out. And so I decided to come on out. And I started with Countrywide / became Bank of America and worked for the bigger banks for about 5 years, transitioned from them to more of the regional banks, stayed there for about 8 years. And then just more recently, in January of 23, I decided to become a broker. And so now I'm operating with C2 Financial.
C2 Financial. Okay, great. And so we're going to get into this, but there's a difference between being a loan officer for a bank and being a broker.
Yes.
And we'll talk about that in a little bit. One thing that I'm excited to share is, our audience is this mixed bag of, we've got homeowners that are looking to understand what they need to know before they start doing a remodeling project or a roofing project. We've got business owners that listen, that are looking for insights on, well, how do I grow my business and do better in business? One thing that we offer to our customers is financing. And so whether it's getting a new roof or it's remodeling your entire kitchen, sometimes financing is a need. And there's some creative loan programs out there that I think you can probably share what's going on right now from a loan standpoint outside of just kind of traditional financing. And so do you mind if we jump into that a little bit?
Yeah, absolutely.
What's your favorite loan program right now for a homeowner that might be looking for either gap financing or to try to get a roof paid for or something like that?
Sure. So there's a ton of financing right now, and just depending on what type of institution you're a loan officer for, depends on what the products you can offer. Obviously, being a broker, I have access to a ton of different products. And for somebody that already owns their home, really traditionally, as of late, because they're probably locked in on a low first rate mortgage, we tend to go with more of a second lien type of loan, like a home equity line of credit or a home equity loan, where it's more of a fixed rate product. So that's where I would kind of push the current homeowner. But if you're looking to purchase a home, one of my favorite my favorite types of loans out there is our renovation loans. Those are extraordinarily powerful for somebody to find something with just good bones and be able to make their house of their dreams by doing anything and everything. Some of them allow even putting in a pool, completely hardscaping your backyard. Yeah, the options are limitless with a lot of these products.
So let's dig into that just a little bit, because I think people for the most part understand, hey, I own my home. I want to pull a little bit of equity out of it because I'm going to redo my kitchen, or I want to pull a little equity out of it because I need a new roof. And so they leverage their home as a tool.
Right.
But this renovation loan thing is a little bit new for some people that are listening.
Yeah.
So walk me through the steps of that or how that works. I go to buy a home. I want to, let's say I just want to gut it and I want it to be exactly how I want it.
Right.
How does this renovation loan work?
Yeah, absolutely. So I think a lot of loan officers are scared of these renovation products because there is a lot more work that goes into it. So they tend to just try to stick with the conventional, hey, really easy 30-day closing.
Right.
But if you've got somebody who's knowledgeable about the process, it can be just as easy. They're going to have to be confident on the process and understand there might be some ups and downs, some hiccups along the way.
Yeah.
But as long as you've coached them in the right process and got the people around them that they need to have throughout the transaction, it can go very smoothly. But really what you're going to do is you're going to find a contractor or a contracting company that you're comfortable with, you like their work, and you're ready for them to work for you, and also that they have the capacity, because obviously right now renovations are a hot topic and a lot of people are putting money back into their homes. So you got to find somebody that has the not only the capability to, but also the time frames will match your to match your goals. But with that, basically you go under contract just like you're going to close on any other home. You just have to let them know once we close, that's when the construction happens. So the seller, in the seller's eyes, it's just like a conventional mortgage.
Okay.
Right. So as soon as they close, the title is transferred over to the new buyer, and the sellers, wash their hands of it. They've got their profit and they walk. The buyer, on the other hand, that's when everything starts. That's when the construction starts. And I guess I should go back up a little bit. When you're getting the home appraised for the transaction, there's actually two different values that the appraiser looks at. It looks at the as is, so making sure that they're purchasing it for the right price, just as it is. And then they look at a subject to all the specs and all the plans that you plan on doing to this home, whether it's lifting the ceilings, putting in granite, marble, what have you, the pool. The appraiser looks at the scope of work and builds that into what will the house be worth after everything's been completed. And that's a big sticking point, because if you're looking to put in, diamond fixtures and things like that, sometimes you're not going to get all that money
appraised
back.
Value.
Right, exactly. Right. So, but if you're taking, Formica countertops and putting in, granite, of course, there's going to be an upgrade there and the value of return will be there.
So I'm assuming that's where a TraVek can come in, right? We're a design to build firm. And so we could potentially walk through that buyer or potential new homeowner to help them understand, okay, bang for buck, here's what we can do and should do. And are we able to work with the appraiser as well?
Yes. So you're going to work with, they're technically an inspector. They have the appraiser, an inspector, and then you guys. And it's the inspector that will look at your bid,
plans, all that stuff,
write up a feasibility study, and then give that to the appraiser.
Gotcha.
You probably won't be able to talk to the appraiser because there's some laws and
bias
regulations
there. I get
that we want to prohibit. But you will be able to really give detailed information to that person who can then translate that over to the appraiser.
Yeah.
And I do want to mention too, because appreciation in this market hasn't been that great over the past couple of years, record low sales for the last 3 years. It is also for refinancing too. So if you bought your home with minimal down payment, you don't have much equity, and you can't get a home equity line of credit, it's not feasible, you can do a refinance with this renovation loan and build in construction, renovation projects.
For future, what the house is going to look like after construction is completed.
Exactly.
Awesome.
Yeah.
Wow.
So if you've got a home now that there needs to be a lot of updates done, you don't have a lot of equity, we can build it in with a renovation loan as well.
Okay. And then, in a perfect world, this sounds beautiful.
Yeah.
How hard is this to qualify for?
It's really not that hard at all, because you just take the acquisition cost, add in whatever the cost of construction is going to be, and that's what you're basing off the down payment. So let's say, for argument's sake, the house is worth $400,000. You want to put $100,000 into it. Now we're at $500,000. Your down payment, say 5%, is going to be based off the total amount. So 25 grand on that $500,000. So as long as you qualify numbers wise, it's just like qualifying for any other loan.
For any other loan.
Yeah.
Debt to income, credit, all that stuff.
Exactly. And so the tricky part of it all is really just making sure you've got a contractor that's, credit worthy, that has reputation. That's why having you guys honestly would be the best thing out there, because
I appreciate you saying that.
No, for sure. Because, there's contractors out there that might have been referred over from a friend, and then they don't have the same, reputation.
They're unlicensed, they're unregistered, whatever it may be.
Yeah, you're really giving, and there's so many horror stories out there about contractors taking money and running.
Yeah.
So we do a lot of due diligence, making sure that they are vetted. We look at their scope of work. They look at past projects. We look at actually creditworthiness and things like that. So we do kind of throw them through the ringer. And then once construction starts, we send out money in draws. And so we do have an inspector go out there, make sure the scope of work was done,
Right.
according
We're hitting
to
this
permitting.
phase. We're hitting this phase. Yeah.
Yeah.
Cool.
And so some contractors can't handle, doing projects without having money in hand first.
Right.
So that's also another reason to have a great reputable brand and company doing the work, because we know you guys can do it.
Yeah, absolutely.
Yeah.
So would you say right now this is your favorite type of loan?
I would say
it sounds
yes.
like you're pretty passionate about it.
For sure, because honestly, one of the things that set me apart from my colleagues is in 2008, I had to really learn how to do mortgages.
Yeah.
I had to jump in when people are actually reading pay stubs, reading tax returns. All these other loan officers were used to no income, no asset, just fog a mirror,
I'm
and you're
familiar with that,
qualified.
yeah.
And so many of them got out of the industry just because they had to put in a little bit more legwork.
Yeah.
Well, this legwork is actually things that are very important. And so I just kind of took that learning new things aspect to it, to my whole career. And so when there's a new program that's out there that I think can benefit my client, I want to know everything about it. And there's just some loan officers and even some banks just don't like the risk from it. Because obviously you start knocking down walls, pulling pipes, like you never know what you're going to uncover.
You don't know what you're going to cover.
So there is obviously inherently some more risk with these types of products. So that kind of goes into who's the bank that you work for, because they may not want that risk on their books. Whereas being a broker, I work with lenders that they want these types of loans. And so those are my favorite loans out there right now. And I try to tell all my friends, especially if they haven't bought a house yet, this is the way to do it, because you can do minimum down payment, 5% down. All the construction costs are being built into the loan. You're financing it. And then another great aspect of it too is you can roll in your mortgage payment for the months you can't occupy the property. So some programs allow you to roll in about 6 payments. So if you can't inhabit that home, you can stay in your rental property or your current home
until it's perfect.
Until it's perfect, and you're not making double payments. You're not overextending yourself in that sense. FHA just allowed you to go up to 12 months of mortgage payments being rolled in. That is a sizable amount of money, so I don't know about the feasibility of that. And I don't know how many projects are going to require 12 months.
I was going to say, to be honest, if it takes us a full 12 months to get that done, then we may not be the right people.
Right,
for
you might be
project.
building from ground up.
From ground up, well, I love this topic because it reminds me. I had a guest on. I guess it's been a couple of months ago, and they were talking about just the climate of the real estate market right now, and they were really comparing it to the '80s. There was a crash in the '80s, but what they were mentioning that was kind of interesting is that all of these loan programs and these tools that people had in their tool belt back then, we just kind of brushed off to the side and people were no longer using because things got really easy. We had the fast and easy loan. We had, stated income, stated asset. And so people just got complacent with putting all this stuff on the back shelf. And it speaks to, you've heard that whole phrase around, hard times make strong people. Strong people create good times, and then good times cycle back to creating weak people that then have to go through hard times again. And so we were just talking a little bit about, some of the things that people had to get creative with in the 80s, got put on the back shelf, and now people are dusting those off and they're like, wait, you can do renovation loans, and you can do, assumptions, and you can do all these things that put people in an opportunity where they can buy a home and have the home of their dreams. And so I love that your attitude is bring that stuff on. Like, I want to do loans like that. I want to be able to make it a good fit for the homeowner and for whoever's trying to get financing. Yeah,
absolutely. I think, like you said, we had, I'd say 15 years of easy street. Honestly, people just were writing mortgages left and right. We'd see nothing but double-digit appreciation. So it was easy. And so for people to transition over to this, okay, we got to get creative, now your commission check is going to take longer, things like that. And they're going to have to roll up your sleeves and be the quarterback. And things may not go great. You have to put your life out, your neck out there. But that's the way it is. You got to help your client. So
from a customer service basis, and I always have found this interesting because there's people in this world that like to take the easy street, right? And if it's going to be a difficult conversation, or if it's going to be a difficult journey to get financing or to get a loan, like, they don't want anything to do with it.
Right.
You don't sound like that kind of a guy. Like, so what's inspired you to be different for your customers, where it's like, I think it's a lost art of, no, I want to do what's right for my customer and for the homeowner and make sure they get what they need. Like, what has inspired you to be that type of a person in a world of people that just kind of like to take easy street?
For sure. There's a couple things that definitely pushed me in that direction. One of the main things is just differentiating myself. Being a loan officer at a big bank, you're just, one of thousands out there. Then going to a smaller bank. And let's be honest, you throw a rock, you'll hit a realtor and it'll bounce and then hit a mortgage guy.
That's right.
Right? And
Yeah.
so you do have to differentiate yourself. And one of the main things of doing that is, what can you offer? How are you different? And for me, it was learning down payment assistance programs, in and out, up and down, have all those guidelines in the back of my head just in case somebody needs that money.
Yeah.
And then it transitions to a different market. And now we're looking at different things. And then when I saw the capabilities of these renovation loans, I saw the potential with it. And honestly, another thing was, I think banking is a very interesting concept. 30-year fixed mortgages designed for bankers,
Right.
for profitability purposes and things like that. So I always had this, this purpose to find some way to benefit the client more than just writing them debt.
Yeah.
What can they truly get out of it? And, creating kind of like an opportunity for them, where I feel like a lot of banking products are just designed for debt, and like people have to get into it, obviously, to make an
Banking's a
investment.
business, though.
It is a business, 100%. So I'm just trying to figure out, like, how can we leverage what a bank's willing to do to really give back to the client? I mean,
Yeah.
honestly, it was, yeah.
Well, you've done a good job at it. I mean, it comes across even in the way that you communicate that you've done a good job of differentiating yourself, and it's important to you.
Mm-hmm.
Something that I want to touch on is, we run into this a lot, even in the sales process, as we are sitting down with a customer for the first time, whether it's on a roof or we're doing a bathroom or a whole home remodel. I think us as human beings are a little bit nervous or scared to talk about finances.
Mm-hmm.
Like it's this ugly thing that, divorces happen over it, relationships are ruined over it, but really it's not that scary. Like It shouldn't be something that we're afraid to talk about. And so one thing that I coach my sales team on is being able to have this genuine, authentic, meaningful conversation with people around all aspects of that sales conversation, but money is one of them.
Right.
And I think as human beings, we shelter ourselves in and we block out kind of the money conversation.
Mm-hmm.
How important is it in your role to have somebody who's open enough with you that can talk about, the different options and what their finances look like and how to leverage their home as a tool and different programs? Like, that's got to be super important for you.
Yeah, absolutely. Going back to just the culture or the way that society views money, everybody's kind of sacred about it. And so you ask somebody what's in their checking account and they like freeze up.
Yeah.
Meanwhile, they go to the doctor's office and just the nurse, not even the doctor, says, "What are you in here for?" And they're just going to open up and share. And so, we're not going to be able to really design the best plan for you until we know absolutely everything that's going on. And I oftentimes tell them, hey, I'm the attorney. I need to know absolutely everything so we can figure out what the best plan of action is going to be and, how the underwriter is going to view things. We need to, make sure we draw the picture in the right way, things like that. But you do have to have really, empathetic heart, especially for folks that are going through challenges. I mean, right now is a tough time with inflation. People are living paycheck to paycheck. I think the statistic is like 50% of people out there are living paycheck to paycheck.
Jeez.
So you just have to be empathetic for those that are in a bad position. And believe it or not, there's so many times I get the call from an agent or from a referral that says, this person, after talking to a loan officer, is upset and she's sad or he's sad because like they made him feel like they weren't worth it. And so that's one big part is, just being able to, I guess, identify and be on that same person's level, understand what they're going through, and, just make sure you treat every single client with the same way you treat your family member, honestly. Yeah.
That empathy is, I think, really cool. It's important to think about because, you go to a bank and it's like you kind of feel like a number, right? What's your credit? What do you make? Oh, your credit's not good. Sorry, you're not our customer. See ya.
Yeah.
And I think people get in this mode where that's what they expect.
Mm-hmm.
And so I don't know if they're embarrassed to talk about it or they're ashamed or there's a standard that they don't think they're going to live up to when it comes to money,
Right.
money, credit, maybe it's collections. I don't know.
Right.
But it sounds like you found a way to overcome that and have this genuine, authentic conversation with people. What's the secret?
I mean, just caring. I mean, honestly, just wanting to help them achieve their goals and their dreams. And honestly, like I just had a pre-qualification the other day, and he said he had challenge credit. He had about a 630 credit score. And I said, if you can get approved for a mortgage, you are a realtor's dream. You know, he's saying, I have an appointment to interview a realtor, and she's really nice because she's taking me on as a client. And, you know, I'm just like, not worth it. I'm not credit worth. I'm like, look, if I can get you a loan, and if I do a pre-qual, I can guarantee I'm going to get you a loan. You are gold. You're just as good as a 780 buyer.
Right.
Don't ever think that just because your score is different and the financing, the type of financing is different, that you should be looked at differently.
Yeah.
Yeah. I think, you know, I grew up, my dad was an immigrant, or is an immigrant, and so he's never really had anything easy his whole life.
Yeah.
He was a masterful jeweler, came from Venice, Italy, was doing jewelry, goldsmithing since he was 13 years old. Once he came to America, couldn't speak very good English and was kind of taken advantage of. So I think a lot of people are just taken advantage of, and they just need somebody to finally fight for them.
Yeah.
You know, be it they're just passionate, they just love having a job, they're not going to ask for a salary increase or raise and things like that. So I don't know, I just look at people that everybody deserves a home and everybody deserves to have a great process. For me, the mortgage process should be easy, stress-free, because it's all about education, all upfront conversations and communication.
Right.
If everything is in line and they know what to expect, you don't have that, you know, staying up at night thinking about things. I mean, of course, just acquiring a home is stressful
It can be stressful as it is. Yeah,
for sure.
absolutely.
But I hate, like, it's nails on a chalkboard to me when I ever hear somebody say, "Oh my God, the mortgage process was awful." I'm like,
Right.
"Oh, it doesn't have to be.
Shouldn't be, right?
It shouldn't be. No,
Yeah.
absolutely." And that goes for people with a 580 FICO score or a 780 FICO score. There's a lot of programs out there.
Yeah.
And, you know, one of my favorite things to do is to coach somebody into a goal-oriented program with actionable items to get you where you need to be if you're not at that point
Sure.
already. Yeah.
Sure.
Yeah.
Well, that's awesome. Can I be a little selfish for a
Yeah,
minute?
yeah,
Okay.
for sure.
So we've talked a little bit about that whole process on if you're buying a home and these renovation loans that are available, and even if you're in the home. When we talk to somebody, let's say my roofing professional goes out and somebody needs a $15,000 roof and they just don't have the cash for it. What's your ability to be able to quickly get them that cash to get a new roof if they're already in the home? Like, are they gonna have to wait 30, 60 days to try to get $15,000 to get a roof done? Or what does that look like on your end? I guess for me, selfishly, if I'm going to have my team leverage your services for things like that with home improvements.
Absolutely. Because HELOCs have become kind of a hot button lately, or second mortgages have become a hot button lately, I have a 5-day HELOC from application to funding.
Are you kidding me?
No.
That is fast.
Yeah, very fast.
So how does that work? How do you do it in 5 days? That's crazy.
So there's a couple lenders out there that are very focused really on a niche product. It's their own separate portal, basically guaranteed underwriting within 24 hours or less. Now, granted, you're going to have decent credit, decent DTI, you know, decent equity, things like that. Yeah. You can't have too many hiccups in the process, and it might take longer. But they use automated valuations, so they don't have an appraiser going out there. They're going to have automated, you know, verifications of employment to verify your income levels and things like that. And they're ready to send you money on the 5th day.
Wow.
Yeah.
Okay, so this speaks a little bit to what we touched on in the very beginning, right? Banker, broker.
Right.
A banker typically is not going to have the ability to say, well, I want to use this guy, and he's going to fund it in 5 days. So what's different about a banker and a broker? Why did you land on being a broker as opposed to working for a bank?
Yeah, for sure. So a bank has their own actuaries, let's say, in the background that say, we want this type of risk portfolio in our entire portfolio. So we're going to handle, you know, 1 million HELOCs, maybe 1 million reverse. And they really allocate strategically what types of loans they want on their books.
Okay.
And that's great. You know, a bank needs to be strong and determined to last into the future. So very good. But they have just ways they operate. And typically, it's a little bit more antiquated. They don't really reinvest in technologies and systems to make things move. One thing I really admired about Countrywide was it was a well-oiled machine.
Sure.
With fantastic products, fantastic communication, things like that. They were really designed to do that. And so kind of going back, there's just banks that don't want to take on that risk, and they don't want to try new things and develop new products. Where, if you work for a broker and you're working with over 100 different lenders that are trying to get more business, they're creating a niche product depending on the environment, the lending, environment that we're in. And so that's one of the reasons I became a broker, was trying to get the best programs no matter who walked across my desk.
Okay,
I want to be able to do anything and everything.
So it being situational, right? Bjorn Johnson walks into your office and his situation is different than these other 10 people.
Oh, yeah.
You have the ability to say, hey, for you, actually, I'm going to use this lender, or I'm going to use this program because it fits your needs way better than kind of the run-of-the-mill stuff.
Absolutely.
And you have kind of the world as your oyster to say, I want to use this guy, or this guy. And correct me if I'm wrong, but I think that you can probably find some sort of a lender or lending program for anybody that walks through the door.
Literally anybody. It has actually been so eye-opening and just a kind of refreshing knowing that there's really a bank out there with a niche to help anybody. Now, for instance, I found a no ratio loan. So there's no income analysis. So yes, it sounds scary. Yes, it
sounds familiar.
It sounds familiar, but we're not double leveraging it with an 80-10-10.
Yeah.
You literally have to have 50% down, good credit, and we have that opportunity. Now the rate's going to be terrible.
Sure.
Let's be honest. It's going to be 9.5%, but that's something that could bridge the gap for somebody that's, say, transitioning between jobs or maybe getting over some credit issues. So literally we have a myriad of products out there, things that I'm learning day to day, honestly. I mean, I'm just learning about these new things. But going back a little bit, one of the main reasons I've transitioned to become a broker is because I felt bad writing mortgages where I knew that the client could find a better rate somewhere else. And just, it just hurt me whenever I knew that, okay, if you went somewhere else, you might get a better rate.
Right.
And, a lot of coaches and mentors have always said, like, well, the process is different, this and that and the other thing. But I'm saying, well, when you get in an airplane and it lands, okay, you expected it to. Same thing with a mortgage. Just because you made it easy, that's the way it should be.
It should
be.
Yeah.
And so one of the reasons I became a broker is just to make sure we have the most competitive pricing out there. Thin our margins out and be able to offer the best products to anybody that, like I said, comes across my desk.
That's awesome. Yeah. So I love that. Again, I love your passion behind it. And it seems like you're in the right spot to be able to help people. I think one concern that homeowners, and maybe not even homeowners, but even somebody that's looking to buy a home has, is we talked about the money side of things. We talked about the credit score a little bit. Everybody's got a different past. I think some people are probably carrying collections. It's kind of this nasty world that nobody wants to talk about. Like if I've got a judgment or I've got collections, I think people automatically just say, well, I can't get a loan.
Right.
Is that true? Should people be worried about that? Or are there programs and the ability for people in the brokerage world to be able to find lending programs for people that have maybe a checkered past or collections out there?
Yeah, for sure. I mean, collections were a really nasty word for a lot of people, and they really prohibited folks to actually go and try to buy a home. Yeah. But that is something that is completely overcomable. I have a client now that has a couple of collections out there, and honestly, the longer you keep them on your credit and the older they are, the less they affect your scores.
Sure.
So, mainly I tell them, don't even mess with it. Don't even go try to pay it off. Don't do anything with it. Just leave it out there. Just let it sit. If you have a moral, fight with yourself that you want to pay it off, feel free, go ahead and do that. But for the most part, we can get away without even have to handle collections.
Interesting.
Yeah.
Well, Zeno, this has been awesome, man. I really appreciate you sharing your knowledge with our group and with our audience. We didn't touch much on the business side of things.
No.
I think we could have a whole nother podcast surrounding business practices and what's good for business. But there's a lot of good information that we went over for homeowners, and hopefully you guys have enjoyed it as well. If people have heard this and they think, wow, I really need to talk to Zeno. Like, how do they get a hold of you? How can they interact with you? if they're needing to leverage some of their financing.
Yeah, absolutely. I always hand out my cell phone number 480-338-7343. And then also you can go on my Instagram. I've got a lot of great content on there. That's Zeno, Zenoaz. And yeah, don't hesitate. Reach out. I always tell my clients, questions are free. So just utilize me as a resource. I'd be happy to give you all the knowledge that I have, educate you on whatever you're looking for. Yeah.
Awesome. Well, Zeno, thank you again for being a part of this and being willing to come down. I know you were just getting over being a little bit ill, and so I really appreciate you being willing to take the time and to spend the time with us. So,
I appreciate you having me here. Honestly, thank you very much for the opportunity and just being such a reputable, upstanding company that you were with or really run. So I just thank you for that.
Yeah, you bet. Yeah. And thank you everybody for always listening. And we get a lot of joy out of doing these podcasts before the hammer strikes. Sometimes we wonder, is it worth it? And then we get feedback from our audience saying, man, I learned this or I learned that. So thank you again for always being willing to participate with us, give us feedback and listen. Until next week, thanks for joining us, and join us again next week for Before the Hammer Strikes.